this video is super cool investment loans every single person who's investing in property should know about. Okay, that's a strong title, right? Yes. Here's the deal. Now, first of all, I'm going to tell you something incredibly important. To be eligible to do this loan, you must already own a home that you live in. If you do not own any homes and this is your first time buying a house, this loan is not for you. If you are thinking you want to buy an investment property on 10, 15, 20, 30 acres, this is not the loan for you. This has a 2-acre maximum and it is designed for residential cookie cutter areas. Very important, okay? Now the next question people ask is how many homes can you own? Could you possibly own too many homes? No. So for the investors with 20, 30, 40 properties already, you can do this loan no problem. So what is it? It's a cash flow loan, but there's actually a really interesting tweak to it that I'm really into. So we're gonna talk about A, what a cash flow loan is, and then B, what the tweak is that I'm interested. Now, something important to note, I haven't done these in the past because what I've traditionally hit over the years is lots of different investors that say they offer this product, but then when I dig into the details of it, they're like, oh, we don't really have it set up, or oh, we don't really know how to price it, or well, we're gonna do it soon, or there's like hooks and weirdness where you're just like, or the rates are so terrible, you're just like, ugh, I'm not gonna do a 5-minute video on this because it's trash. Okay, I did some more research and I found one that I'm really into. I may be doing it for myself. Now, here's the basics. You can do investment property 20% down. We do run credit. You know, the credit score differs based on which version of this you're trying to do, but it is as low as 660 pretty easily. I do recommend if you're doing a loan like this, you know, if you've had trouble paying your bills in the past, this may not be the best loan for you personally, just because you don't want to get into trouble. And with any loan, this loan doesn't look at your income. It doesn't look at all of your assets. It's looking at your credit report, your credit history, and then it's looking to make sure you have the down payment as well as 6 months reserves for the property. That's it. Okay. Now, a lot of people go, oh, I was declined by a bank because they said my debt to income's too high. I would say don't go for this, okay? And the reason is whenever you have a loan like this, you want to use it to help you yourself get to the next level. That's why I was saying if you're having trouble paying your bills or anything else, I would not go after this loan, okay? You want to put yourself in the best position. Now, there's other lenders that offer this product that may have a different opinion and they may not care about your future, but I do. So let's say here are the situations I think it makes sense and why I may use it for myself. Now, first of all, if you own 20, 30 properties, there's no limitation on how many properties you can have. The second thing is you're not going to be doing the same level of work when it comes to documenting all of those properties that you would with a traditional loan. So for an investor that's trying to move quick, you know, the average time to close these is 2 to 3 weeks. And if you have 20, 30, 40 properties already, it can get very intensive with the traditional paperwork. This can be a great option to just slam it shut. Now, the way the loan works is it's basically making sure that the property is going to cash flow more than the monthly principal, interest, taxes, insurance, in any HOA. That is the basics of what it's doing. So if the property is going to cash flow, cool. Now, if you're like, well, I'm going to Airbnb it, they're looking at what long-term rents would be. So if you're seeing that with Airbnb, you could make 10 or 20K a month and that's the only way it's going to cash flow, then the 20% down option would not be great. They do have an option where if you put down 25%, you don't even have to show that it cash flows. You do have to have a credit score over 700. But as an investor myself, I think this program's so interesting because I love the concept of moving really fast. And don't tell anyone, this is our secret, you know, me and the 400 people that watch this, but I hate paperwork. Oh my God, I hate paperwork. I hate it so much. I want to scream. It drives me nuts. You know, I hate explaining stuff. I'm the worst I'm that client. That's why with you guys, I'm always like, I get it. I know you don't want to give me that. So for me, I'm like, ooh, if I'm, right now I'm trying to get my taxes done, but my tax lady hasn't given it back. I'm W-2, but I have properties, so if I'm going with a conventional loan, they're definitely going to want to see my tax returns because of the properties. But if I see an opportunity, I don't want to wait for that, so this can be a great option for the investor that's looking at 3 to 4 properties, has a stack of cash and wants to deploy it and doesn't want to deal with the traditional, hoops. This can be a great program for the person who's looking to buy that property that may not cash flow immediately. The 25% option, that's the one I was looking at. I was like, this is kind of interesting because a lot of my investing isn't based on cash flow, it's based on appreciation plays. So what that means is that I'm generally trying to target something where I think that if I improve it or the area that it's in is gonna go up, so the money I'm trying to make is not like a monthly, $500 here, $1,000 here. I'm hoping, 3, 5, 7 years that I'm gonna get a good chunk of change out of it. So the 25% down for me was very interesting because of that. Now, something else that can happen is sometimes maybe you have a big stack of cash, but you're self-employed and you write off all your income. Bing, bing, bing. This loan's great. We're not looking at your income. We're not looking at your debt. We're looking at your credit score and we're looking that you have the assets to do the loan. So really exciting program. Now, very important to note, the rate. Is the rate as low as if you were doing a traditional everyday mortgage? No, it's not. The rate is definitely higher. Whenever you're doing something in lending that's super easy, breezy, and nice like this, the rate's gonna be higher. I would probably say given any day, you could be 2% higher than if you were doing all the paperwork. So that's definitely something, it's something I'm personally weighing out because I'm like, oh, I know I qualify, but I hate it when they ask me for stuff. Is that worth a couple percent? Probably not. I'm probably gonna go the traditional route, but I love this as an option. And I love this for clients who over the years, we haven't been able to help them with investment properties because maybe they write off all their income, or maybe their taxes weren't done, or maybe they own too many properties and didn't have enough reserves, or 900 reasons. So I am super excited about this program. It's in most states. So as always, I am licensed in 47 states. Please set up a time to talk with me before you fill out any application. That's across the board. It's always good that we get to know each other and we know each other's goals so that I can make sure I'm a good fit. You can make sure I'm a good fit. We don't want to just get an application and not know, okay, what are we doing with this? So there will be a link to book a time on my calendar to talk about investment properties. I am excited about this program and I'll be keeping you guys up to date if I decide to utilize it with my purchase, but it's a fantastic option. It's a fantastic way to invest and it's definitely worth knowing more about so that you have it in your arsenal of options. As always, thanks for watching and I look forward to talking to you guys. Questions or comments, please leave them here. Thanks.